Let's answer some of your questions now. Steve Weiss, I come to you first from Jeff in Nashville, Tennessee. Crown Castle, CCI, is it still a buy?
Look, I still own it, and every day you're supposed to think about things like, if I still own it, it must still be a buy, but I'm not sure. It's moved up on rates. I believe that you may see it move down. We got a little tick down today if rates move. However, I still like the 5G play. So longer term, yes, I have no interest in selling any of it. Don't see myself selling it.
All right, Rob, Seachin for you from Jay in Long Beach, New York. Shouldn't you be on the beach, Jay? Well, maybe he's asking from the beach. Energy, bear market. What about it? What do you do with it now?
We're neutral. I think in the short run, it's going to be vulnerable just due to exposure to the cycle and sentiment. If you want to buy it, I'd stay in the main space with the diversifieds and the fully integrateds because they've proven their ability to ride this out. There's one spot within energy that I continue to like that has growing cash flow, really attractive yields, tailwind from infrastructure. Yields are 8.5%. I like the MLPs here. I think there's a disconnect with rates coming in, spreads being a little greater. I think you can buy MLPs. Plus, they trade at a premium to the other defensive sectors, which are trade at a discount to the other premium sectors, utilities and REITs. About 9 times EBITDA versus 11 and change. So I like it if you're selective.
Okay, cool.
And you're patient.
All right, thank you. Jenny, for you, from David in New York, Dow. Is Dow a good buy here?
Dow is a way better buy here than it was when I paid 53 for it in May. So I love Dow. If you're wearing, everyone hates plastics, right? So they're like, oh, plastics are terrible. But the reality is, if you're wearing sneakers, if you're wearing makeup, if you sleep on a synthetic pillow, Dow components may very well be in there.
Okay.
Trading right now at less than 10 times earnings, next year's earnings, and has a 6.4% dividend yield that is paid for 117 years straight without interruption.
Okay, Doc, Kate in Mission Viejo, Mylan.
I like it.
Mylan Pharmaceutical.
And I have bought it on occasion, but they've almost always been short-term trades, Scott. Right now, there's nothing that's out there longer term. So people are betting on short moves over the short term. Today, it had a big move. It's up over 5%, almost 6%. So congratulations if you owned it already.
Let me throw another one at you guys.
Sure.
Anybody can answer. This is a curveball, but bear with me. Only because Merck, we were just talking about Mylan. Merck got upgraded today at Leerink, outperform. Anybody like Merck? I mean, Pete's in Merck and Pfizer, I think.
Pete is in both. And
that's it? Nobody else is in the big pharmas?
He likes them because he thinks they're so stable and obviously dividend yield and so forth, and he just writes calls against them. So I don't think he's in it because he thinks it's just off to the races. I think he thinks it's steady.
All right, Mrs. Dividend?
I don't own Merck. I own Pfizer and AbbVie, which have much higher dividend yields.
True.
And I think all of the valuations in the pharma sector are pretty depressed. So don't own Merck, but I don't have any issue with the sector.
Would you go Pfizer over Merck?
Yes.
And exposed in the 2020 elections. It's a debate on drug pricing that everybody can get behind.
All right, good stuff.